What if I told you we could copy and paste a simple prompt into Claude every morning in pre-market to find some of the best trade opportunities at the market open? That's exactly what we're going to do in today's video, and if you stick through the entire video, at the end I'll give you the exact prompt that you can copy and paste and use for your own trading. So here's an example of what we're going to be getting out of this prompt from Claude. Essentially what we're looking for is going to be stocks that have the best chances of a gap and go once the market opens. Ultimately looking for stocks that are carrying that momentum from pre-market into the market open and then throughout the rest of the day. So because of that, the first part of this is finding stocks that are gapping up in the pre-market session. You can use really any different screener or scanner that you choose to, but if you search pre-market gappers, I believe the first website that pops up for this is going to be TradingView. It's very easy to use and it's free to use. It will tell you all of the stocks that are gapping up listed from the biggest percent gainers from their previous day's closing price. So this is a great way to find these stocks that are gapping up and then plug them into Claude in order to find these gap and go setups. So if we take a look at this prompt, we can see obviously it is pretty long, but don't worry, it's going to be copied and pasted down below in the video's description so that you can copy and paste it and use it as well without having to type all of this out for yourself. But essentially what we're looking for is going to be a catalyst. What kind of news or events is driving the price up in the first place and creating this gap? We also want to know, is this catalyst durable? Is it an earnings beat, a contract win, FDA approval, or is it fragile, kind of just a pump of the stock price, something like momentum, sympathy, or a social media play? All of this is going to help us to determine if this stock is going to be a great gap and go candidate, or if it's most likely just going to sell right back off after this gap up happens. We also want to see the float number, the dilution risk, because if the stock is being diluted, if the company is diluting shareholders, it's going to make it very difficult for that stock to have a big intraday run with all of that incoming supply being sold into the market. We also will be able to see the gap and go likelihood. This is going to be ranked by Claude here using all of this information that it's providing. We're going to see the 6-month position range. This can kind of tell us where the stock is over the past 6 months. Is it breaking out of a consolidation period? Is it maybe at 52-week highs, or is it still maybe within 20% of the 52-week low? All of this is going to factor in whether or not this is going to be a gap and go. We'll be able to see some daily chart key levels. It's going to give us historical gap behavior to tell us how this stock typically performs on past days where it's had a gap up, similar to what we're seeing today. And then it's even going to give us a detailed trade plan to actually tell us how we can look to potentially trade this with an entry, a risk level, and even some targets to lock in some profits. And when you put that information into Claude with a list of stocks that are gapping up in pre-market, it's going to go through all of these different websites in the matter of maybe a minute or so, scanning through different news sources, finding breaking news, finding dilution, finding different SEC filing information, and all of this is going to factor in to how likely these stocks are going to be to have a gap and go. So if nothing else, this is going to save you a ton of time doing research in pre-market, because obviously it would take you much more than a minute to go through all of these different websites and to do this analysis and research for yourself. Now, according to Claude this morning, the best gap and go candidate out of the 3 stocks that were provided was USEG, followed by YAAS, followed by ONCO. And we can see that USEG technically had a strong catalyst. It had a high gap and go potential. Catalyst was a 5-year helium offtake plus 20 million debt facility being closed. The float is about 25 to 30 million, which is a medium-sized float. And there was medium dilution risk for this stock. So the gap and go likelihood for this was technically considered to be about 80%. YAAS, on the other hand, had a moderate catalyst, being 18% stake in the TikTok agency via share exchange. The float was considered micro with high dilution risk, and the stock has a history of diluting in the past. So this had a 45% gap and go likelihood. And then ONCO, we can see that this is a very high risk gap and go, weak catalyst, high likelihood of dilution, very low float, and ultimately Claude told us to avoid this one altogether. So we can get some more information by scrolling down here. We can see how much these stocks are gapping up relative to their catalyst quality, the conviction scoreboard based on volume, the catalyst, the float, the gap and go likelihood, and the risk for the stock. And if we scroll down to the bottom here, it's even going to give us some trade plans that will explain to us how we could look to potentially trade these stocks at the market open. whether that be an opening range breakout, whether that be maybe a dip buy into the VWAP or a reclaim of the VWAP, or in the case of ONCO, we were actually told to avoid trading this for a gap and go altogether because, again, the catalyst was weak. The stock has failed to hold every other prior gap in the past 6 months, and there's quite a bit of nearby overhead resistance for it as well. And just to show you that I think Claude was pretty spot on with this one, we see a strong move up in ONCO in the pre-market session. And pretty much all day, there were several different attempts for this to start picking up some momentum, but was never able to get past VWAP and ultimately pretty much just traded sideways throughout the day. So no real trade opportunity there, and I think that Claude was right in telling us to avoid this one. Now keep in mind, if you don't trade small cap stocks like the ones that we just went over in those examples below, you can obviously make some adjustments to this to cater it a little bit more to your preferences into the trading strategy that you're using. If you're trading higher price stocks, maybe get more information about where the stock is at in terms of its 52-week range. Is it trading above the 50-day exponential moving average? Does the stock have institutional growth? Does the company have strong fundamentals? You can obviously swap some of these out to get a little bit more specific criteria for that. But ultimately, again, if nothing else, this is a great way to quickly and easily save you some time in doing your research in pre-market to then prepare for the market open and hopefully find some of the best trade setups when the market does open. So anyway, I hope you found some value in this video, and if you did, please make sure to give it a like and subscribe to the channel. This entire prompt is going to be down below in the video's description, so you don't have to type it out yourself. You'll be able to copy and paste it and just fill in the tickers that you want to look for. So give it a try and let me know how you like it down below in the comments, and let me know if you've made any adjustments to it to better fit your trading strategy as well. And if you're looking for a quick and easy way to maybe level up your trading and gain a little bit more experience, we have a free 1-hour beginner course at Master the Market. That's going to be linked down below in the description as well. Thanks again for watching. I hope you enjoyed, and good luck with your trading.